Up one day, checking your bank account and realizing that the money you've been saving for years has lost a huge chunk of its value overnight. It's not a nightmare. It's what could happen if the US dollar collapses. The dollar isn't just the currency we use here in the United States. It's the world's reserve currency, the backbone of global trade. Every day, trillions of dollars move across borders for goods, services, and investments.
Foundation crumbles. How would it affect your life, your savings, or even the global economy? Would groceries get more expensive? Would countries go to war over resources? And how quickly could this domino effect spread around the world? In this video, we're going to explore exactly what might happen if the US dollar collapses. We'll look at the causes, the immediate consequences, and the shock waves that could ripple through every corner of the planet. By the end, you'll understand why the stability of one currency matters to billions of people worldwide. The US dollar isn't just another currency, it's the global standard. Almost every major commodity, from oil to gold, is priced in dollars. Countries keep large reserves of dollars in their central banks to stabilize their own economies. International trade agreements often rely on the dollar because it's considered safe. This dominance didn't happen by accident. After World War II, the United States emerged as the strongest economy. The Bretton Woods system tied other currencies to the dollar, and over time it became the currency of choice for global trade. Even today, about 60% of foreign currency reserves are held in US dollars. That gives the United States enormous influence over the world economy. A dollar collapse doesn't happen overnight. It could start with massive government debt, rising inflation, or loss of confidence from investors. For example, the US has over $30 trillion in debt, and if investors start doubting America's ability to pay it back, they may stop buying government bonds. This would push interest rates higher, making borrowing more expensive. Another scenario could involve hyperinflation. If the Federal Reserve prints too much money to cover spending, the value of the dollar could fall rapidly. People would find that what used to cost $10 now costs $50 or more. Foreign countries might start avoiding the dollar, using other currencies like the euro or the Chinese yuan for international trade. If the dollar loses value, Americans would feel it fast. Prices for imports like electronics, cars, and clothes would skyrocket. Gasoline could become much more expensive because oil is traded in dollars worldwide. People's savings would shrink in real value, retirement funds could take a hit, and credit card interest might rise. The stock market would likely crash as companies struggle with higher costs and falling consumer confidence. Banks could face liquidity crises, and businesses that rely on imports or foreign customers could go under. Essentially, everyday life could become much more expensive and uncertain. The US dollar is deeply tied to the global economy. Countries with dollar-denominated debt, think emerging markets, would suddenly owe far more in their local currency. This could trigger financial crises across Asia, Africa, and Latin America. International trade would also get chaotic. Since commodities are priced in dollars, a collapsing dollar could lead to huge swings in prices, causing shortages and surpluses in unexpected places. Countries might hoard resources, and governments could impose strict currency controls. Financial institutions worldwide would scramble to adjust. Banks, investment firms, and multinational corporations would face huge losses. Stock markets in Europe, Asia, and the Americas could tumble simultaneously, creating a domino effect that might take years to recover from. Economic turmoil often leads to political instability. Governments facing economic collapse might see protests, strikes, or even riots. Countries could adopt protectionist policies, banning exports to protect their own citizens. International relations could also shift dramatically. Countries that previously relied on the dollar might form new alliances or switch to other currencies for trade. This could weaken the US's global influence and empower other economies like China or the European Union. While most people would face hardship, a few sectors could benefit. Commodities like gold, silver, and oil might see price spikes. Investors who predicted the collapse and moved assets into safer currencies or real assets could come out ahead. On the flip side, everyday consumers, small businesses, and countries heavily dependent on imports would be among the biggest losers. The ripple effect could last for years, affecting generations. Recovering from a dollar collapse wouldn't be quick. History shows that major economic crises can take decades to fully recover from. The Great Depression, for instance, lasted over a decade before employment and GDP fully rebounded. Countries may attempt to stabilize their own economies, but without a strong reserve currency like the dollar, international trade would slow down significantly. Inflation could remain high for years, and social unrest might continue until people regain trust in the financial system. If the dollar falls, the world won't stop trading. It'll just use something else. The euro, Chinese yuan, or even cryptocurrencies could start to play bigger roles. However, switching global systems isn't simple. Contracts, debts, and pricing all rely on the dollar. Transitioning to a new standard could take years and cause more instability in the short term. While most people can't control the global economy, there are steps you could take to protect yourself. Diversifying your investments, holding some physical assets like gold or real estate, and being cautious with debt could help. People might also consider learning new skills or starting small businesses to create alternative income streams.
Governments and financial institutions may also take action. Central banks could coordinate interventions to stabilize markets or implement currency reforms. But the speed and effectiveness of these actions would depend on global cooperation and political will. History offers some clues. The collapse of the German mark in the 1920s, Zimbabwe's hyperinflation in the 2000s, and the 2008 financial crisis all show how fast confidence can evaporate and how devastating the effects can be. In each case, ordinary citizens suffered the most. Savings became worthless, jobs disappeared, and economies took years to rebuild. Governments often had to implement harsh measures to regain control, sometimes infringing on freedoms or creating unpopular policies. Economic collapse isn't just about numbers. The loss of trust in money can create panic, hoarding, and social unrest. People might withdraw cash, avoid spending, or move assets abroad. Communities could fracture as wealth gaps widen and resources become scarce. Media and misinformation could amplify fear, leading to more erratic behavior. Political leaders would face pressure to act quickly, but rushed decisions could worsen the situation. A collapsed dollar could change the world order permanently. The U.S. might lose economic dominance while other nations rise to fill the gap. International trade, diplomacy, and military power could shift, altering alliances and global strategies. On the bright side, new systems could emerge. Alternative financial networks, regional trade agreements, or even new digital currencies could offer more stability in the long term. But the transition would be turbulent, and those unprepared could suffer greatly. The collapse of the U.S. dollar isn't just a financial headline, it's a global shockwave that could touch everyone's life, from your bank account to international politics. While it's impossible to predict the exact timing or severity, understanding the risks can help you prepare. Diversifying assets, staying informed, and thinking ahead could make the difference between struggling and surviving. Economies are interconnected, and a crisis in one country can ripple across continents in a matter of days. Ultimately, this is a reminder that money is more than paper. It's trust, confidence, and stability. Protecting that requires awareness and planning. By considering these scenarios now, you can be better equipped for whatever the future holds. Stay alert, stay informed, and remember, even in chaos, preparation is your greatest asset.